Good afternoon, everyone. BC Richfield here, coming to you live from a very sunny London. It's just gone a couple of minutes past midday here, making it a couple of minutes past 1100 UTC. A really big shout out to everybody watching this live today, as well as all of you that watch this on recording. How are we all doing today? Nice to see a little bit of positivity pumping back into the markets. No real surprise on that front, considering the key factors that we've been looking at, but it is still nice to see it play out in what has been such a news and fundamentally driven market at the moment. So today we're going to start by having a look at Bitcoin. You know, this instrument obviously really sets our conditions for crypto. We're going to take a little look at traditional markets as well to just try and build that picture up of whether whether the conditions are there to really continue to support the risk bid, or if this is a real kind of pressure relief valve or pressure release valve would be more accurate, based on the fact that the market seemed to have so far priced in the geopolitical risk and don't seem to see it as too bad. I don't want to really put it in those terms. I'm talking purely from a market perspective, not a humanitarian one. Obviously, any war is terrible. Markets, however, are very efficient, very cold at pricing this information in. What's interesting is, it's the pretty big shock to the market to take. We can see here on the chart, we've had a lot of downwards pressure here. We've come into really key levels that we've been targeting to go long for a while. If you guys are members over at the Nest, or if it's something you're interested in, this is the reason we do daily Bitcoin reports where all the different analysts contribute to these. And our key elements here, we were looking for June's low to be taken out. This is a large weekly gap that we were looking for price to find support within. And then we set the conditions here, which you can see back on Monday. It was actually set in the Bitcoin report on Sunday evening, that this then becomes the condition. So what do I mean when I'm talking about conditions? Well, as traders, we're trying to paint, the way that I see it, is three different pictures in our head, right? One is the fundamental news and macroeconomic picture. Basically, we just want to see the key areas that we're analyzing for that to tell us whether we're on more of a risk on or risk off environment. Once we establish that and we establish there's room to breathe, you're then looking on technical levels. And the way that I look at the charts is I'm framing it on a higher time frame, saying to myself, like we did here, for example, where's a really, really good place that we could see price react here with this massive bullish weekly gap, right? What's happened? Well, we've seen absorption here up at the highs, these long upside wicks, have come in. Prior all-time highs, always key areas to watch out for. I know it was a lot closer, but as we did here, when the all-time high was set here in December, price came up. We had a strong rejection candle. You can either wait for a second candle confirmation after you get the bearish engulfing. You're pretty confident price is coming down for at least these lows and probably these inefficiencies. And then the move that started everything on the way back up, that's why, by the way, when we took out this low back here, these lows, collection of lows under here, great liquidity pockets because they're relatively equal. But when we took out these lows over here, this long wick down here, I was very vocal in saying once we had that weekly close, I thought that was super bullish. We had this long downwards move. Buyers stepped in aggressively. So henceforth, waiting for the confirmation candle, fine. It ripped most of the move from us. But at that point, we're really, really confident, or I'm really confident the price is coming at least for this liquidity. And then we can quite comfortably measure how price reacts at that level. These long wicks lower are telling me that buyers are stepping in here and sellers are losing control of this. That's what's important. And the reason that that's important is because that's what's happened up here, right? We've got all this liquidity being left up here in the form of these highs, and price hasn't been able to come up and take it yet. Why is that important? Well, price has seen a rejection at this level, but people focus so heavily on the low time frames. They see a structural shift on an hourly chart or a 4-hour chart. They're shouting for bear markets, right? Funny enough, the ticker just hit 666 as I said, a bear market. But what you really want to be doing is saying to yourself, well, the markets, look at it as a story, look at it as a kind of living, breathing organism. It needs time after these massive efforts to cool off a little bit. Think about this as running a marathon almost, or the first stage of an Ironman competition. Then what you're doing is you're then taking that little bit of respite here to refuel and move higher. That's why if we see rejections at highs, we look for price to revisit gaps. Yeah. So we take the liquidity from here. There's a lot of stops up here. There's plenty of liquidity, but it's also a great place for people to take profit that have been long from lower down. So then we see how price reacts at the gaps. If we start closing into the gaps, yeah, then I get a little bit concerned that these look weak. If we close below them, then I'm looking for shorts down to the next inefficiency or lows, right? However, what we can see here with the collection of lows that we had and also the gap is how price is just having these nice wicks at these areas. Now, this candle in truth wasn't particularly helpful because we saw a rejection wick here, fine, price came back down. We then saw another one here, right? But this is what I'm interested in. The buyers stepped in when we got into the gap, right? Then we can look at something like a daily or 4-hour in case, which we'll move on to in a moment. And this daily candle's nice. It's a longer downside wick. We can see the absorption stepping in. This is the Sunday. So then when price action opens on the Monday, when I say I'm looking for conditions to be set, then I'm looking for something that's going to tell me if we do X, I'm looking for long setups. If we do Y, I'm looking for shorts, okay? And those conditions for me, I often set on the 4-hour. So please feel free to go back and check the stream and bits and pieces. You'll see all of this. You'll see it in the reports and that. You'll see it on Monday's live show as well, which is all recorded and available for everybody to rewatch if they want to on the Bird Nest channel. You can find them under the live shows with me, BC Richfield. And this arrow, as we do every week, we leave these on the charts. I know it can look a little bit messy, but it really helps us understand the reasoning behind the delivery. Because one thing I'm very conscious of that I want to do on these shows, none of this constitutes financial advice. This is purely me rambling on about my thoughts on the market, how I've carved out my career, how I trade today, how I run a very, very, very successful trading team, which the truth, by the way, a lot of people ask me about that, how we keep the consistency is, it sounds ridiculously twattish, but just make sure you're hiring very, very good traders. All the traders we have just don't cause me any issues at all. They're just exceptional, right? And you go through your good periods, your bad periods, right? But if you build and balance a team, this is in response to a few questions I got last week, sorry. If you balance a really good team, then you dovetail very well, meaning that we have intraday traders, we have position traders, we've got fantastic fundamental analysts, gem hunters. And the whole idea is that when the market's peaking in everyone's area of specialty, they're maximizing on that. So for example, when we were in the really good swing conditions, as an intraday trader myself, the intraday trading was stuttering along really. You know, ultimately intraday trading, the way that I certainly look at it anyway, is more about mean reversion or catching reversals. When we're trending, they're beautiful swing conditions. So the swing team were really bringing the lion's share to the table there, where in conditions where things start to range and get a little bit tricky, that's when the intraday traders step in. And obviously the positional traders are underpinning it with long-term outlooks, great investment potentials. The fundamental team are identifying IPOs, ICOs, and we're just managing to build that as we go through. And I'm going to show you guys something very quickly before I go on, because I really, really don't share this enough. And I feel like I kind of do the wonderful team that we have over at the Bird Nest a bit of injustice, really. So you can actually find these all on the website now as well. So let me get this up for you. We came up with a decision to start sharing these live with people so they can see exactly what is um, basically everything that the trading team is doing. Yeah. So you can go through, let me just share this with you quickly. You just go onto the Bird Nest website, and then you can just go straight through to call stats. All right. And what you'll see here is the previous month's stats. Yeah. So this was April. We've got May's on here as well. You see, we managed an 87.88% win rate. And what I would say for anybody skeptical is these are all posted live and in real time, so there's no way we can really cheat these. Members get access to all of the pre-market information, the calls shared ahead of time, the reasoning for the calls, stop loss, risk management, targeting, absolutely everything. And of course, you have your peaks and troughs, but it's really interesting information when we look at it. 33 calls total, 87.88 win rate, total profit as a percentage. Bearing in mind, this is on the swing front. The percentages on the intraday trading is very, very minimal. So profit per call 6.7%. We did 12 live trades in the month. The total return on your risk was 53R. So just for example, if you think of your risk as your stop loss, if you're willing to lose, $100 a trade, then you've made $5,300 following the calls last month. And that's an averaging out about 1.1 calls per day. Interesting. So that's just disappeared off my screen. I'm not sure if that's the software or if that is a little bit of a technical issue, but do let me know in the chat if you guys can still see that. I've flicked back to the chart now, but the studio software is just kind of showing me a black screen at the moment. So do let me know in the chats. Craigie boy, sorry, mate, I didn't see you say good morning and hello in the chats there. So if anyone can just give me a heads up, if you can see what's currently the Bitcoin chart, then hopefully the streaming software hasn't completely collapsed and left us in the dark. Let's fire it back up and see if we get any better luck. There we go. So hopefully you can all see that now, guys. But I really must make a point of sharing these calls more, and henceforth our wonderful development team have now added them to the website for you. So if you are interested in staying on top and tracking what the trading team are doing, you can find them, and we will be adding links to the calls as well, so you can see the calls that were made, the descriptions, the TA that went into them. So hopefully it provides a really good learning resource for everybody for free. Now, back to this point. So the conditions, thank you, Neil, you're a star. Thank you, mate. The conditions were set by this gap. So if I want to see a reaction at this level, then I don't know if buyers are going to step in here or not, right? I have no way of knowing that. So what I want to do is I'm either looking for a good reaction at this level, but then I want to see a condition. And my condition was this big bearish gap, right? So on Monday, we were stating out that, look, price needs to close above this, and then any pullbacks are for longing. And that's basically just what this arrow here represents, all right? So we're just going to hide that for the moment because it doesn't need to be on there. You can go and look, like I said, at the previous streams if that's something of interest. Once we've then expanded, once we've had that, we want to see that we have clear liquidity targets remaining intact, and it's these gaps here that allow us to get back involved, but we'll cover that in a second. So when price closed above this gap here, look, the other thing as well, look how price is just eating into this gap. Remember our kind of hot water test, yeah? So I don't know if any of you have heard me ramble on about this before, but it often makes the students chuckle a little bit. It's the idea of hot water, right? You've got two pans in front of you, one full of boiling hot water and one that's completely tepid, and you're blindfolded. Now, you have to take it in turns to put your hand in the water. If you put your hand into the water and it's tepid, you can keep your hand in there for quite a while, right? Chances are it's not going to force you out. If you put your hand in there and it's boiling hot, you are going to get a pretty swift reaction to pull your hand out of it. That's what I'm looking at highs and lows and gaps. I'm looking for price to tip its hat that sellers have stepped in aggressively here. And this is what I want to see fail here. So when I see sellers failing to take control here, and that's proven to me, first of all, when we rebalance the gap, because again, look how well this bearish gap did its job, right? This one here, right? So what happened here? Price tickled this gap and then sold off aggressively. Fine, all right? Didn't spend really any time in it. This one here, look how price just grinds into it. Then when we close above it here, that's when we've inverted the gap. That's when we look for this to offer support, right? And that's when we can start overlaying some other factors in here as well. For example, we didn't revisit it, which is such a bullish sign in my opinion, but the breaker candles here. This is the breaker block. This is the up move before price flushed out liquidity lower. We've now closed above this key area. That's where the selling was really aggressive. Closed above this key area here. On the close above that, that's when we initiate and we say, right, now we're looking for long positions, okay? Now, the reason I wanted to cover that at the beginning of the show, I'm going to do a very, very quick bit on news and just take a look at our kind of risk on and risk off here as well, is because that's how we're going to run through our charts today for the alts. So what I want to do is just kind of run through, if you've got any chart requests, let me know. We're going to cover them on the show today. We've obviously done Bitcoin. We're then going to run into Ethereum. Got a massive guy in the office. There we go. So we're going to run through Ethereum. We're going to take a look at Solana. I've got a couple of other requests that were sent to me by members, so I'm just going to have a quick look at what they are. And while I do that, let me know, guys and girls, if you've got anything that you would like me to chart today. And we're going to use these same principles. We're going to look at what price has done. Now we're going to look to set the conditions for where we want to be active now. Okay, Craigie boy, yeah, sure. We're going to do Sol. AVAX, one of my favorite cryptos to trade. What was the other one we got asked for? That was it. Axon DAO. Yeah, perfect. So we'll take a look at that. Yep. AXGT. We can certainly take a look at that one. Then we want to look at Credi as well. We've been asked for. Hey, Jojo. Good to see you, bud. Hope life is treating you well. So yeah, just let me know, guys. If you've got any others, be more than happy to cover them. We're going to run through a few as we go. So let's start with ETH. And we're obviously going to get our really messy chart back up here because, again, we want to make sure we're accountable. Now, this was a liquidity target that we were aiming for, by the way. So this was no, actually it wasn't. What am I talking about? This was the draw, wasn't it? So that's still live and that's still in play. Now, why were we bullish on ETH and what does all of this mean? So let's go back very quickly through what we were talking about. We're reacting here at a key bullish gap on the weekly, right? We've swept out some liquidity from the lows. We pushed up higher. Creating this gap, we've seen a market structure shift and a lot of momentum and energy through this, right? Now, we saw quite clearly here that we were getting resistance from this. I don't know where that's gone, actually. It was on the chart at some point, but... Oh, there we go. Yeah, so we're getting resistance here. This black line is the order block, right? And this Fibonacci here, the 50%, is marked by this blue line. It's just so that we could keep the chart a little bit cleaner, all right? Shitcoin investor, brilliant name. What we got? Banana. Render and FET. I'm sure we can take a look at them for you, mate. Oh, Jojo's bullish ETH. Yeah, so am I, Jojo. We've been bullish from right in here as well, which has been nice. ETH was the absolute cleanest, by the way. So weekly gap, yeah, we can see that it's a daily gap as well, but we see the big weekly gap here. Beautiful, right? So then looking at the daily to see if we can refine it down anymore. That's where we've got the daily gap. We see price drive into this. Remember what I was talking about before, right? Look at this gap here, right? And price, I think it does quite tickle into that, but this low. See how the long wicks are showing you the buyers are stepping in here and you trade it high, and how the long wicks to the upside here, once you take liquidity, tell you sellers are more prominent. You do, however, get situations like this, where this is bullish for me, a bullish close above it, but then when you close back below, price shouldn't be showing you weakness at that stage. It should be finding the buyers on this level. So then when you invert the gaps, then you're pretty sure price is selling off lower. We're just using those similar principles to see how price reacts at these key levels. Now, on the daily, bounce longs here were the play. Again, you can see this all either in the TBN reports, you can see it on my Twitter, you can see it on the previous videos. The reason we're really bullish here is because we're reacting at key bullish levels, right? Now, looking at this as the Fibonacci, we were looking at this leg here on the way down. This leg on the way up was reacting at the golden pocket. So if we look at the impulse leg higher, yeah, the 618 to 66, Beautiful reaction there, again adding confluence to the longs. But then the Fibonacci we drew from the high to the low, this is the 50%. And I'm expecting a retrace to that kind of region, right? Yeah, I'll redraw it actually. There's so much mess on that chart. Yeah, so the 50% here, which is why we've got the big thick blue line, and also why we've got this yellow box here, because this represents the golden pocket, all right? This is what I'm looking at when I'm saying this is where it makes sense to me that price will be drawing towards, as long as we're respecting the bullish price action, all right? Neil, I'm guessing from you're actually based in the UK, it's always a good giveaway, isn't it? Yeah, I'm in London, my friend. If so, what platform do you trade on, please, that's acceptable to the UK financial authorities? That's a really good question. So I'm mostly a traditional market trader that trades private equity. So I do a lot of trading on instruments like the NASDAQ, the S&P 500, for example, as well. Some stocks and some FX. In terms of crypto, obviously, which the UK is an absolute disaster for in terms of regulatory standards, what I would recommend, or people that I've had very good experiences with, is Apex. So decentralized exchanges, right? Now, obviously, you have to do your own research on these, and I'm certainly not recommending that you would in any way breach any kind of ridiculously inbred UK litigation towards futures trading. But that's where I would run my peepers, my friend. They're really, really, really stepping up now, and yeah, they've always been exceptional for me. So the other thing that you can do as well is there's some very, very friendly crypto prop firms out there now as well. So if there's anything you're interested in, by all means, drop me a message on Twitter and bits and pieces. And I've got affiliation with you. None are paid, but I know very, very good people at them. So I can certainly happy to send you a few recommendations. Obviously, you're then trading trial accounts, right? Or basically, non live accounts, demo accounts, and then when you prove yourself through different stages, then you can actually get funding allocated to you. So definitely worth checking them out, mate. And yeah, Jojo saying you're a bullish ETH. Same here, right? And then we get this beautiful reaction again. Even if you don't have to just blindly long this gap. Look, if you wait for the close of this candle, this is a super bullish candle. We've got inefficiencies here, drawing price higher. We know where our Fibonacci's are. So that's what kind of painted the scenario. Now, we needed conditions, right? And this, when we look at the Sol chart later, we're going to see that we didn't quite have it as clear as this on Sol, which is why I said I'm favoring being bullish on ETH. This was the bearish gap. Remember, exactly the same principles that we're overlaying on the higher time frames, just what we did on Bitcoin, right? We've got a reaction here, this big, beautiful bullish gap. Look at these long downside wicks, right? Showing you buyers are stepping in. So this becomes my condition. My condition here is I want to see price grinding its way into here. Then when it closes above, this is where we're looking to get long. All right. And then again, remember, just as we did on Bitcoin as well, when we have these large expansions, we're then looking for key areas that we can get re-involved, trading this to higher targets, right? So this was a good secondary re-entry, right, which happened yesterday during London. Now, there for intraday trades, by the way. And Neil, you're very, very welcome, mate. It's a very tricky landscape over at the UK at the moment, which is a terrible shame, but hopefully it improves when we get retards like Rachel Reeves out of office. So if we're looking at this here, continuation plays for me need to come from gaps, or we're looking for order blocks to be respected, right? So this is a key area of demand, right? Buyers stepped in here, pushed the price high. Now, why did price stall here? And why am I expecting price to seek liquidity lower? Because of the wicks, right? So we've done a couple of things here. One, we've come into this higher. Although we had a slither of a close above it here, look how when the wicks are coming in, you can see sellers taking control here. The other factor is this inefficiency here, this gap, bearish gap. Yeah, look how price, again, look how it can't spend any time in there. It's the hot water test. It drops back out, gives it one more go, and now it's pulling out again. So the way that I'm looking at the chart today is I'm still bullish on ETH, but I'm looking to get long from lower down. So I'd love to see a pullback to this kind of region here. Yeah, that's a low, sat with inside a bullish gap. We know there were buyers here before, but as we have to accept when we're late buyers or late sellers, you really want to be kind of getting in and out relatively quickly, because really you want to be long from these kind of regions when you've got really clear liquidity targets above, right? Getting in and around here, you want to be a little bit more nimble. So there's a chance that late longs here can get punished before you see that move higher. All right, so that's what I'm looking for here. The other thing that I would consider is if we saw a very strong reaction, which we're seeing just kind of the formation of one here at the order block, right? Because once we closed above this, we never retested this area. So as price has driven back into this now, what have we got? About 34 minutes until the close, haven't we? So as we see here, price has come in and it's starting to find buys, but I don't really just want to kind of dive in on this candle because I still don't know if it's going to come down for here or not. So I would like to see price, definitely have a strong reaction, maybe close back above here. And then again, if we're really starting to encroach again into this gap, it tells me the gap's probably not really doing its job in terms of our expectation that bearish gaps reject price and bullish gaps support them. So now I've got a clear plan, right? In my head, I understand that I can take longs from here if we close a good bullish candle in 30 minutes, targeting the highs. If not, and we start to encroach below this, I'm expecting price to take out this or possibly retrace deeper. For extra confidence, we can also use our Fibonacci's. Now, this is an interesting one because I think I covered this the other day. Purists will probably hate me for this, but I typically look for the main expansion leg, meaning that I'm looking for a consolidation, and then for price to have that impulse move higher. This is a very small consolidation, so you really could take it, and I'm far from a Fibonacci expert, but you can take it from that low here. And what I like about this is that's the low that swept liquidity and also took liquidity from the highs. But as an impulse leg, I could also understand people drawing the fib from there. So now what I'm saying is if we're following the same principles, we could see a corrective move as low as the 0.5. So what would make sense there, right? We just draw the 0.5 in for a minute and then we can take the Fibonacci off. Right? Well, what would make sense here to me is if we got a quite aggressive move down towards this level. It doesn't have to come into the 0.5. If the trend is strong, which this clearly is, we could, we could react higher up. So if I see that and then a very bullish reaction, I'm willing to get long here. But also, if I see a longer and stronger move into this level, but a very, very strong recovery from it, that's when I would look to get long as well. If I start to see weakness at these levels, however, that's when I would look to kind of go the other way. The other thing that you can do when you're looking for reactions at these levels is utilize structure on the 15-minute. So not the best example here because we just had such a large move up into this level, took liquidity and then broke down. But what you would be looking for here is something like breaker plays, right? So this is the down close candle that led to price sweeping liquidity to the highs. Yeah, I do focus on the bodies, but I do make an allowance for the wicks as well. If we draw this across, we can see quite clearly we never got a close below this. Yeah. So then what I'm looking for is price to draw higher. Yeah, if I'm looking at this low to this high on the Fibonacci, which took liquidity and had the expansion with the gap, I'm then looking for price to draw higher up here. And then from up there, then I can look for shorts. So down close candle, price swept liquidity. We didn't close below the lows. Fine. Down close move, price took liquidity. Did we close below these? We did here, right? So what we can see is even if we just make an allowance for the bodies here, right? Draw this out. Price sweeps liquidity here, so let's draw that in. Price takes liquidity, closes below. We now expect this area here to offer good mitigation as well, because people that are caught offside here, people that were long, price breaks down. When price then comes back to this level, they can get out of that position after holding through the drawdown at a minimal loss or sometimes at break even. And then the chances are higher that people then jump on board with the trend lower. So if we're looking at that type setup here, which is one of my favorites on kind of 15 minutes if I'm looking for swings, then if I'm right about the order block here, and it's not about being right, actually, it's if I see the reactions I need to see, I've got a perfect set of conditions here. I love this to long into, by the way. There's not a lot of gaps. It's just pure efficient price action to this higher. And I have perfect conditions to play, which is this gap. And this potential order block, breaker block, sorry. So this is currently a bearish gap, and this is suppressing price, yeah? So if price is strong enough to invert this gap, meaning we come up and we close above both, yeah, Obviously not expecting necessarily to do it just in one candle, but you really want to see momentum with these moves as well, right? So you want to see it done in as few candles as possible, right? To show that it's cutting through an area of resistance. I hate it here. Hello, mate. So if we get something like that, then boom, large expansion, retest of this area, I'm a buyer. And where am I a buyer to? Well, into these highs. Yeah. At that point, I would then look to take something off and mitigate, move my stops up, etc., and then look for another leg higher. And we've got our kind of higher targets, which are outlined above over there. Price continues to break down at this level, however, then all we do is we just chill and we wait, and then we look for price to engage with our lower targets here, or down towards this, okay? And they're the same principle. So that's what I'm looking for at the moment on ETH. I'm not looking to jump in while we're smashing into resistance. I think the fact that we're seeing these long upside wicks here is showing a bit of absorption, price pushing down. Obviously, the caveat to all of this is that it is the current geopolitical situation and how sensitive the markets are to news. So you really do have to have a look on that as well, because at the moment we've got Powell testifying, which is where he's basically justifying the moves that the Fed have made. Very unlikely we see a massive reaction off the back of that. We did Tuesday night saw a CB consumer confidence come in low. Yeah, it was forecast at 99.4, coming at 93. Even that wasn't really enough to shake the market. And then as we move into today, we've got Fed Chair Powell speaking and new home sales, right? So just being aware of where those major catalysts exist in the US market, which ultimately affects the stock market the most. So that's what we're looking for. But Thursday, we have final GDP quarter on quarter, which is big. And then on Friday, we've got core PCE. So just be aware that we have got some key news drivers this week, you know, on all time frames, but especially if you're looking at anything kind of intraday, they're your real kind of moments that you trade those catalysts. So this is where we are in ETH. So we're going to rip through the rest now. We've got about, let's have a look what we got. We'll try and get this done in about 20 minutes from here, right? We're going to cover Solana, AVAX, AXGT, Credi, Banana, Render, and FET. So let's smash ourselves onto Sol, and we're going to move through these ones a little bit faster, right? So Sol, what was the plan? Sol was a little bit of a sneaky one, right? Weekly was great, came back down to our key support area here. Look, just key pivot point, resistance, support all the way through here, deviation, price back above. You want to be buying areas like this, or I certainly want to be buying areas like that. Now, if I'm looking at it here on the daily, might not mean a lot to you guys, but we came back through and held this, which, why is this significant? Well, it's a bearish gap here, rejected price, closed above it, retested it perfectly, extrapolate that across. If this is where the aggressive buyer stepped in previously, yeah, this was the consolidation that led to the expansion. Chances are this is a good area to buy and a terrible area to short, right? Again, sometimes it works, sometimes it doesn't. You just need to be doing these things consistently. So we've been putting a lot of the emphasis on this on the 4 hour. And what was a little bit unfortunate here with Solana, remember I said this on ETH a moment ago, is where ETH inverted this gap beautifully here. We had another one above on Solana. And I did say that I would rather see price invert this as well, just to see that we weren't going to get rejected hard here. Now, when I saw this candle close, again, spent a little bit of time in here. We hardly saw the quickest rejection, and we rebalanced it very quickly, meaning that we wicked through it, but we didn't close through it, right? So now we've got these inversions here, right? Unfortunately, this candle was just a monster. So it was just into the PM session then to kind of trade that up. And for me, this was just a little bit high, but I did add Solana down here. I've explained very clearly that this blue box represents exactly that. So spot positions increased on Solana down here. Where this leaves us on Solana at the moment, right? If we're really kind of favoring the H4 here, let's just take a very quick look here on the daily. Daily's quite strong. We've inversed this little gap down here as well. I think we've got pretty clear targets if we're looking at a daily high for the intraday traders here, which would be this high. And then this high up here within this gap is going to be massive, because that gap was so instrumental to price really having that large sell-off. So back to the 4 hour here, what can we make? Now, do I have anything really clear and obvious here? I don't. And actually, we've just kind of inverted this gap here, right? We've spent a lot of time in this bearish gap, so it's making me feel quite bullish here. So what I'll do in scenarios like this, if I don't have anything really, really clear and obvious, then I'll move to a lower time frame. We're very high in this move, so it is dangerous considering where the liquidity is up here. So I would only look for intraday plays on this today. We might be about to get an indication here, because This was a bullish gap that failed. We retested it, pushed lower, failed to take liquidity here. Now we're showing strength to violate this and come back above. I think if we closed that above here on the hourly, my expectations would be this high, followed by the high at 148.78. Seems to be quite a lot of strength going into that at the moment. Is there anything clear on the 15-minute for us, or what could we use as an actionable play? It's a little bit unfortunate, really, because it didn't take this low. Right, so what we've not had, if we'd had this up move, price had flushed out this low, we could look for a close above here to set our breaker block and then look for short-term swings up into this high. As it stands in here, there's nothing particularly clean for me, so I would be using those hourly conditions, and then I would be looking for a 5-minute breaker block play, I think, in here to just day trade that up into those levels. That's where I am with Sol. In terms of kind of higher time frame where I think this is going, I'm just going to start cleaning some of these bits off the chart because we don't need these on here anymore, right? Looking at this down here at the moment, we do still need to remember that we're, still holding bearish structure here on the daily. So a little bit of caution is to be advised. If we're looking for the daily breaker candle, it's here, or candles. In this case, it's one candle. It's the up close candle before price sold off into to take liquidity from the low. So a close above this level here at 153.06. Let's just confirm that on the actual candle itself. The close was 153.02. Yeah, so a close above 153.02 on here on a daily scale would have me very bullish because we've rebalanced most of this gap and we've got a lot of liquidity resting higher. Until we get there, we need to be aware of this high over here, right? So I think what would make a lot of sense to me is price doing something like this, taking out this high, retreating down to this bullish gap, allowing buyers to step in here, and then we see that push higher. That's the kind of move I'm going to look for. So that's what we're going to look for. Too messy, mate. The only reason I have them like this, my charts are absolutely spotless when I trade, but is because we keep everything on here as justification for what's been said on every live show that we've covered since, I don't know how many hundreds of them we've done now. But you're right, it is very, very messy. You want something like this. And in this case, you can then really clearly identify here as well. You've got downward sloping liquidity. You want to see a close above that. You want to see price moving with momentum. We've inversed this gap here, but the same rules apply. On a daily scale, I want to see a close above this level here of 153.02. SCI, yeah, of course, mate. I might need to move a little bit faster, but I'm sure we can get through that. SCI, so then we can put this back on, and it does look like a Jackson Pollock, you're right. But it's just so that people that come onto the show, I get a lot of people messaging, emailing, saying like, okay, well, you said on this show it was going to do this. Can we look back over that? So I just keep everything on here. But yeah, fuck me, it does look really, awful. Right, AVAX. Where are we with our old friend AVAX? One of my favourites to trade. Good old AVAX. A little bit cleaner here, I suppose. We can start cleaning up bits and pieces like this anyway. Now, this was really key here. See this? These are joined bearish gaps here. What our condition was, we need to close above this to move higher. See how we did really good progress? 1, 2, looks like it's going to invert. 2, you get the close. Bearish candle here shows you the rejection, and ultimately price breaks down for the next resting liquidity. We can now get rid of that, which was our condition. We can also get rid of this, and we can get rid of this, right? So a little bit cleaner for us here. Now, this is just a key support level for me here from, I don't know. Well, actually, we can look a long time ago, right? A long time ago anyway. But it's just a key pivot point, right? Or, a key kind of inflection point in the market, support resistance level, whereby we've seen good buying here. Yeah. Key support resistance flip here, resistance turning to support, beautiful retest. So again, look, if this was considered fair value down here, then no reason that we shouldn't start seeing some kind of moves. Now, looking at this on a weekly scale, right, we haven't really taken any key liquidity, but we are at a support level, so that's okay. We've dipped into this and we've had a reasonable wick recovery here. But again, you want to see a secondary bullish candle here, ideally. Look, wick recovery of this kind of length, you're feeling bullish at least up to the inefficiency. This closed below a little bit, but then look what happened. Wicked below, closed back above, and then we had that lovely little run off the back of it. So we'd look for a bullish close here on the weekly, but I appreciate, we want to look at some kind of more, some plays that we can have more recently. Now, this, I think, is a good condition here for the daily. Yeah, because we've got a daily gap here. Now, we have just swept some liquidity. Let's just check that this is a high here. What's the highs? 397. Okay, perfect. So that is a legit high. So we've had that first initial rejection, right? So remember, whenever we take a high or a low and there's a gap nearby, if you see that wick rejection there, you can either take short-term intraday trades, which are very risky because you're typically going against your higher time frame bias, but you could take short trades into this off the high, but you didn't really have much room for maneuver. But this now becomes a really good area to look for longs, right? Now, we don't have structure on our side. We haven't recovered anything key, right? We're basing this on if we can continue the momentum that we have, right? So on the 4 hour now, we're going to say, okay, do we have any other conditions that we can follow? Well, yeah, we've got a big 4 hour gap here within the daily gap. So we can mark that up. And what I'm starting to like here on this candle at the moment on the 4 hour is just this reaction looks really lovely. We're dipped into the daily gap, into the 4 hour gap, sweeping out this low, and see how we get that nice long downside wick. I'd be tempted to look for intraday longs above here, actually, targeting these highs, this slope liquidity here. They would beautifully equal highs here as well when you're looking for draws. You know, either cluster highs like this or equal or relatively equal highs are really, really good targets. So once this candle closes, we've got that in about 17 minutes from now. Then I have to say, I quite like. Let's have a look to see what we've got. Oh, God, this is a really interesting one here. I'm almost tempted to jump into this if we get this here. So this is what I'm most interested in here. You could allow for both of them, but there's a doji in between, so I'm going to take the higher. Right, so let's look at what we've got. Even on the 15-minute, we just want to see confluence, price reacting. Beautiful big bullish gap here, right? So great place for price to step in. What else have we done? Have we seen a local liquidity sweep? We have, yeah. What else does this back up here as well? This starts to become a very high probability setup for me, and I'll tell you why. We haven't done this yet, so it's not going to go purple straight away. But we haven't closed above this bearish gap yet. But if this candle closes above the bearish gap, we're going to watch this, and it closes above this here, then I would definitely consider getting long here. But you really want to see high momentum candle. You want it to close up into here, then retest of this for me are for longing. Whether you would look for a 5-minute setup in there, whether you would take that, and you can probably put your risk under here, or certainly underneath here. So let's say, for example, we get that. You open your limit order here, stop loss goes under the swing low here, or you could defend it further by putting it under here, under the inversion gap. And then realistically, as I'm looking left here, I'm really not seeing much that can reject price until we take it up to here, right? So, in terms of looking at actual valid setups for this, I really, really like that. Now, obviously, we can have the news come in. We can have a lot of different factors that can affect price. We want to obviously always keep a little bit of an eye on Bitcoin as well. Yeah. So just another thing that we were looking at here on ETH, right? Just high volume breakout of this area and buying those dips or selling the pattern breakdown that we had. But I just wanted to take a very quick look at Bitcoin over here as well, because it looks like we're going to get that close. Bitcoin's still looking nice and strong, right? So I think that's a nice setup there on AVAX. So we're going to leave this one on here. Please. Yes, I'm going to look at SEI for you, mate. Stefan, I'll take a look at that. But yeah, I would long that all day long. Right, so can you please analyze... Oh, move on USDT? Yeah, sure. Okay, we'll find some room for that one as well. I really do need to move faster, don't I? But okay, we'll come back to AVAX, or we'll certainly be able to review it on next week's show anyway. But that for me is a really beautiful breaker set up there. So limit order set on the top of this. Okay, and then risk, I'm going to go a little bit risk off here, and I'm going to put the stop underneath the inversion gap, right? So we'll take a look, see how that one works out. Now, we've got to AVAX, we've got 1, 2, 3, 4, 5, 6, 7 more to do, right? We're going to rip through these. Let's go for, what was it we got asked about recently? did it on here, didn't I? No. So let's have a look at this. Hey. Yeah, here we go. Pick up on Axondale where we were and take a look at our beautiful squiggles. So price just chilling in this area. Not really a lot to write home about, unfortunately. So apologies whoever it was that asked for Axondale. But the reason that I've been a buyer around here and just continue to add here as we kind of grind lower is from a fundamental perspective, again, absolutely glowing report. On this project and the team and the research come back really well and the due diligence as well. So just highlighting the key areas that I want to be involved. Obviously on a weekly scale, this was the consolidation within here, right? Led to this massive rip, great buy here, good buy here as well. Obviously come back down into it. But like I said, this is something that I'm treating just in terms of creating spot bags. And we can see by the world's worst squiggles, what we were looking for to confirm this as a deviation below our support level. Yeah, we wanted to see price invalidate this gap. We never got it. Price long upside wick and price sold off. So I'm just going to get rid of this now because that is horrific. Large rejection wick, price sold off. Okay, no problem. So because I'm not looking to swing trade this, all right, I can get rid of that as well. That was just showing the failure block. I can just look for other plays within here. So if I want to see strength in this now, the first kind of area I would look for some form of recovery would be within this daily gap. So daily bearish gap, right? Price moves into this. We've seen an initial kind of rejection here, right? But it's a bit of a doji candle, so it's a tricky one. Equidistant wicks either side. So price closes above this, then I would consider swinging this higher on Axondale. I still think it's got a brilliant team, great project. I think, you know, if we're going to step into those conditions that these things start running again anytime soon, I think this has got huge upside potential. So really happy with that one. The other one called in was Credit. Mad chart. Just clear that up in a second. Let me just go to our weekly here. Let me take a look where we are. 47. So we can see the conditions that we had on here, right? So let me just kind of zoom this back. This was an area that I bought. Yeah, this consolidation before this big rip. So bought here, yeah, red line and the blue box, but I didn't get any fill on the blue box. We didn't quite come back down into it, but this is the consolidation. We came incredibly close though. Yeah, literally right on the edge of it, but look, it's absolutely fine. Look how this level was respected. So that's really, really key for me. And again, looking at this as a long-term hold, it's one of those, it's the kind of project when you understand the team, the environment, what's going on, the landscape, that even if projects like this don't run now, it's the case of accumulating these at very good levels because you have such belief in the project as a whole. And if you're wrong, right? You can only back, you know, your own strategies. So with this at the moment, really want to see price establish itself back above this. Yeah, because at the moment, price is kind of coming into this area. It's a little bit messy and it's kind of selling back. So I'm going to move this onto the daily. We can see what we were talking about here again, right? This is where we got the reaction. This was on the 4 hour. Here's our green box. Indicates this, right, which is the bullish gap. We wanted to see this low swept, or for a price recovery, which we got on the lower time frames, then we got the sweep here, traded it higher. I did not swing trade any of these. These were purely outlines of what I would look to do if I was swing trading them. Things like Credit, AXGT, for example, some others I much more hold. I hold those on spot, so they're much more considered investments. And we can see what the conditions were here. And I'm going to run through these now because then I'm going to get rid of them, right? Price to come back above this area here. Why? Bullish gap, close below, becomes an inversion. Rejection, rejection. We saw another rejection, so we wouldn't get long on this, right? So that's what that signified there. So for now, I'm just going to clean a load of this stuff up. Well, hang on. We'll just go on to the lower time frames very quickly so you can see what the 4 hour was as well. So look, really simple. With this one, we wanted to see a break above this hold and move higher. We didn't get it structurally how I wanted it. This was really nice off the back of the inversion if I was looking to long trade that. And this one, which is where we got the breakout, whenever we see a breakout of a key resistance level, you either want to see the initial breakout traded above, in my opinion, and retested, yeah? Or you want to see a retest of the area followed by market structure recovery, or in this case, a big, beautiful bullish gap. Price closed below it, so we're pretty certain the price was going to come down for these inefficiencies and ultimately these lows. Now what we can see is that, you know, it's looking like it wants to move a little bit lower here, but I do think these, obviously, the kind of riskier assets that we see with these are going to move a little bit later. You see Bitcoin setting the move at the moment, Ethereum, and then obviously as the capital flows through, I know it's been a little bit different this time around, but yes, yes, as our Polish friends would say. Now, what I quite like about this is we've had a nice liquidity sweep of these lows, and we've got this breaker candle here. Now, the problem that I've got with it is we've not exactly got the best close above this. Again, you want to see momentum. And while we've got momentum in terms of the two candles, which I really like, it's not the greatest close above. So again, I would then decant to a lower time frame and say, okay, what's going to make me believe that price is ready to hold here is if we hold this 4-hour bullish gap. Yeah. Close below this, and these just look far too tempting for price to come and take out, all right? So again, looking for moves down to these levels again to add some more. But if we start holding these levels above the breaker here, then I would definitely consider some swing positions on this, even though it's not an asset that I personally swing trade. But looking at it from a technical perspective, I know some of you guys and girls will. So, banana. Is this, whoever asked for banana, let me have a look back up here in the chat. Who was it? Shitcoininvestor.eth. Yeah, I'm just going to look at the USDTP. If you've got another particular ticker or something that you would like me to take a look at, do let me know the ticker and I'll take a look. Right, so weekly, we haven't taken any key levels here on the weekly, so a downside initial target would be this low. Daily may paint a slightly clearer picture for us here. I don't like when we leave these kind of USDT. Perfect. So this one, good guess. Thank you, mate. So we've taken out this low here, and we did have a pretty quick recovery. Now, I like to see wicks at lows, right? Because technically, if you see price close below it, these are often areas then used for resistance or support, depending obviously which way you're going. So as I'm looking at this here, I'm saying, okay, price did wick below, but then look at the downside wicks into this area, and we've seen a very strong recovery. Now, what we need to ascertain is whether this is fundamentally driven and whether the technical side can stack up above it. So there's a few things I really like. We've inverted this, right? So these two bearish gaps here, close through with one candle. That shows a lot of buying strength coming in there. So I'm really happy with that. I'm going to mark this up. Ooh. If it will let me, as a daily. And now what we've created is this big, beautiful bullish gap here on the daily as well. So all of a sudden, my conditions are drawing down into this. I'm going to be looking for buyers here. The other thing that we've had here that we haven't on some of the others is we've got a structural shift. We don't have a structural break here. All right. So market structure shift. We've gone from lower lows, lower high, lower low, lower high, lower low, first higher high. Yeah. So we've got the shift. What we now want to see is price get support here and break above this. And then this area becomes super interesting. The other thing that we've got here as well on a daily scale is we've set this breaker. So while this might look messy, if I'm kind of asking myself, is there, you know, is there good support here or is there good resistance? Well, I'm seeing mostly support. Yeah, we've kind of had a little wick rejection at this gap, but that's fine. We've taken a high. So now we look for price to cool off a little bit lower. And then we look for our longs within there. I will take a little look at the 4-hour chart, just see if we've got anything that kind of overlays that as well. Again, really nice kind of Fibonacci. Again, tricky one. That's kind of the impulse leg, but this is the kind of leg that's taken liquidity that I would consider a bit more prominent. So if I'm looking at that here and I'm saying, well, if we can get a pullback to this kind of region, what does that overlay with? Well, we've had our 50% pullback. If it's particularly strong, we still expect the 382. And on a 4-hour, I've got these kind of adjoined bullish gaps here. So you can see all of a sudden how we're stacking all these areas that price can find buyers here. So what does that mean? Well, it means that if we violate this and close back below it, then I'm pretty sure price is coming for this low via this one. Until then, whilst the fundamental and news drivers are in our favor, this is where I'm looking to get involved here. The tech is great. RR is perfect as they've launched their pro website. Well, thank you very much for that, Shitcoin Investor. That is really, really good information to have. The other thing I quite like about this here is it is a large consolidation, but if we look at all of these collective down candles here, we have a huge area of demand. Dipped into it there, massive move. Dipped into it here, massive move. We're now back into it again. I would have preferred to see this low taken, but I can absolutely see why on a technical level this stands up really well. So that's great. And then render. I'm just going to stick these ones on the stick with these ones on Binance for you, shitcoin investor. Yeah, unless you let me know otherwise, my friend. So on the weekly, wow, really similar here, right? We've kind of left these lows intact on the weekly. So we're probably going to see this when we start seeing this consistency. If we see it on a few more lows intact here, so we probably want to see those run in an ideal world, but we don't live in an ideal world. That's why we're traders. Very similar here, except this move was more efficient on the way down. So this looks a lot like the TA on Banana, which is telling me that it's going to look a lot like the TA on quite a lot of these type coins, right? We're seeing this rejection here at this gap at the moment, which I actually quite like because it's telling me again that perfect. So as we go into here, sorry, that was perfect to your comment. That was a shitcoin investor, so not to my chart. We've got the same situation set up here, except we don't have the breaker. Yeah, we've got inversion, big momentum move above it, bullish gap open below it. Yeah, now we've seen the rejection at this high. That means we've got the market structure shift. Remember, we don't have the breaker, which would be a nice bit of added confluence to see a close above this, right? But I'd be looking for price to draw back to this area here and move above. If not, I'd be looking for price to close above this and then confirm that as a breaker. Yeah. So 2 counts of play here. One is this candle or the following candle closes above, and then we're looking for a return to this area to be a buyer. And I think this high is a great initial first target. Or we're looking for price to not close above, but we get the move down without the close into this kind of area here. And that's also where we could, look for buyers. I think either of those plays and setups. Again, if we close below here, all right, then that invalidates that, and then we would look for price to target these lows. Okay. You're welcome, Craigie boy. Thank you very much for the comment. So yeah, I quite like that actually. Remember, we've only had structural shifts on most of these assets at the moment, so we're playing the strength based off of kind of some hopefully geopolitical stabilization and hopefully some good numbers. We need to remember that there's going to be a little bit of market turbulence coming up. With all of that aside, with the fact that the inflation from the tariffs that Trump imposed on on countries from the US will start to wash through. The analysts at the major institutions are expecting this data to kind of come through July, August, and September. So if it sees, if the data reflects that the tariffs are driving inflation up, then there could be a bit of a problem. And then if Iran weaponize the Strait of Hormuz and drive oil prices up, that's going to cause inflation to rise as well. So that's where we want to be a bit cautious. So we want to get while the getting is good, right? As we say. So that's where we are on render. We've got 3 more to cover. So FET. See what we were looking at here on FET. Again, came into this, so I added FET here actually. So I always do these large accumulations before these rips. It's come back down below this. This was a reasonable pivot point here. Resistance, support. Deviated this. So a retest of this area, and I'm interested. All right. Apart from that, on a weekly scale, we're holding this weekly gap quite nicely. So we have enough catalyst. We've got an inversion gap that we're also holding here, meaning that this makes this area what's known as a balanced price range. Just overlaying gaps, bullish and bearish, right? So we put that in. It's normally like a pinky purple color. So not a bad area to find reaction here. Now moving down onto the daily, we've got much more of an Ethereum situation, right? So we've got the ETH situation whereby we've inverted a beautiful gap here, offering support. We've actually activated the breaker here as well. And we've created this bullish gap underneath. So we've got that beautiful trifecta of basically, if this doesn't offer support and we don't get longs from it and we close below it, then you can be pretty confident that we can then short a little bit lower, certainly down to this main support. And if we start to lose that, then I think we start to go a little bit lower. But again, we've got this kind of cluster area here that's telling us that this could be a good buy zone for FET. And just in terms of, of course, because it's on if you're using this for any kind of hourly, then if this area is going to hold and we're going to show a lot of strength here, then we could look for the sweep here and a close above the breaker here for a retest and then to long it. This gap might be a little bit of an issue because it's a balanced price range, but ultimately, if price action is strong enough, we should be able to trade it intraday till at least here. Right, SEI. I wonder if we covered this with one of our big messy charts as well. Other than this sweep, which again, look, didn't work out great. Price closed below it aggressively, so expected price to head down for the liquidity from the lows. The caveat is that we got these gaps here. When we had a bullish candle close here with a gap low, once we get back above this area here, look how this area then becomes quite key in terms of offering support, right? So we don't really need that on there at the moment, right? But on a weekly scale, this looks really strong, actually. Coming off of, so we've actually broken market structure now, right? So this is an MSB here because we're coming off of a higher low. It's also currently ripping through equal highs. So that's very interesting as well. Yeah, so again, we need to see how the weekly candle closes really, because it's a really good area to reject, at least temporarily. Big gap over here, these highs and these equal highs here. So let's see what we see on that. Shitcoin investor fundamentals FET have brought about $700 million buy from Tensor, and they will soon start buying. That's very interesting information, mate. Thank you. Yeah, I remember the fundamental guys in my team making me aware of that. So this has been a good call, actually. We've got some spot bags on this, but again, it's not an asset. It's not an instrument, sorry, that I've been swing trading. You got beautiful trend line liquidity here as well, right? Look. Yeah, and I mean, if you're doing a best fit line as well, I'd probably in truth favor it more, something like that. That would have been the deviation price guide, and then you want to see a high volume breakout. That, though, is actually a much nicer in terms of the breakout and the retest, right? But however you draw your trend lines, basically, I'm just using them in fact of looking at resistance, 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 resistance. Big, strong move above, especially if you can add volume to that, and these tend to be good breakouts. Anyway, on a daily scale, this thing's just tearing faces at the moment, so it's very, very difficult to get an entry on this. I would look for price to cool off and pull back before doing anything. 4 hours is going to look really the same. If this thing's going to run aggressively, I would imagine it will do so from here. Right. So demand or the order block, strong move higher, leaving this gap. Price now comes into this and we get some lower time frame 15-minute breaker setups or buy signals within here. Maybe it's just a little bit too strong, but what I'd really kind of look for here, probably some kind of deeper retracement, but 50% is down here. Maybe this low or something as well would be certainly of interest, because maybe price just sells off down to this low. Then we find this nice gap, which is aligned with the golden pocket, and then we get some nice opportunities to enter there. But I definitely wouldn't be a buyer up here. Yes, we have got Move. Actually, it's our last token that we're doing now, my friend. So Move, which is the last one we've got written on here. USDT, or after on you, mate. I'll take a look at the Binance chart for you, and this has really taken off as well, right? Now, on a weekly scale, we don't have tons to go for. Massive inefficiency in this movement up, so not really telling us a lot. So we're immediately going to decant here to the daily. Daily I like, right? But would I be getting involved in this here? We've had a structural shift here. Again, not a break. So let's mark that up as our MSS, market structure shift. Nice balanced price down here, really big reaction coming up. We've left a beautiful bullish gap here, which we are respecting. So now we just need to be patient here and wait to see what this reaction does at this high. If we close above this, then I'd be tempted to look for longs a little bit higher. We've had a nice reaction here. If we close this here, though, and we start to correct down, then this, for me, will be a key line in the sand to find out what price is going to do from here. You'd want to see sweeps of that and then a strong recovery. At the moment, we've kind of had the major expansions on this, so I would be sitting a little bit flat. Doesn't mean that it can't run really hot from here, obviously. Conditions to set on the early, we can see this really took off, actually. London bought this really, really heavily this morning. So that's quite interesting in itself. So we've now got some nice conditions in a few minutes. No, actually, I'm lying. We've just flipped the new candle, haven't we? So we would actually have to wait another 4 hours from here to see if this gap closes. But ultimately, right, any high longs here, I would need to see this gap close, and I'd need to just see A plus setups in here, good sweeps, good breaker respects, and then look to trade it higher. If not, my expectation would be that this gap probably gets pulled back a little bit and maybe even isn't there. And if that's the case and price starts coming back down, this is the area that we want to look to be involved from here. But again, I think it looks decent. Most of these things are very, very low, right? So we just want to start to see some structural recoveries here. And then what you want to see is bullish gaps being respected and bullish areas of demand or order blocks being respected as well. All right, legends, I am going to love you and leave you there. Thank you very much for your time today. It's been a real pleasure. For everybody that's members with us over at the Bird Nest, we'll be switching over to our live trading in about 9 minutes from now. We're going to look at the pre-market and we're going to take a look at the NASDAQ today, and we'll see if we can find any crypto setups as well. For the rest of you, if you are interested in joining us over at the Bird Nest, you can find information down in the description of the YouTube or the Twitter post, whatever you're watching this through, or you can always reach out to me on Twitter at BC_Richfield. All right. Wishing you all a fantastic week ahead. Oh, TP, Steph, hang on. SCI. We did it on this chart, didn't we? Fuck. Well, it depends where you're in, mate. But, you know, and this is obviously just me, but I would have been looking to take profit around this kind of area where price is at the moment. We've got this gap over here. These highs were really key as well, but we did have a nice close above those. So while that area holds, yeah, if we do see price coming back down to this area, remember on the lower time frames, we've got a kind of decent buy here. It really depends where you've bought, mate. It's very hard for me to say. Risk management really is kind of up to you. But what I'm always an advocate of, especially while conditions are as unpredictable as they are at the moment, is making sure that you are, booking a little bit of profit, right? Not just trying to hold these things. Look, this thing might absolutely moon, and you might say, BC, you're an absolute piece of blah, 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 because I sold here and this thing absolutely ripped up. I'm not suggesting you do sell. If I was here, I would have taken some off around about these levels. If I was looking for a cleaner level, I would say probably this here, where you've got kind of equal highs over here. Is tricky, but that wick high here is of interest for sure, because that's price wicked up here, and this is then that consolidation move here that led to the big sell-off. So we would imagine there's some stop losses resting above there, so it could get forced up into that area. If I'm looking at it on the 4 hour again, I would just want to see this area hold if I was holding this with conviction. All right. And push up towards targets here, but nobody ever got poor taking profit. All right, legends, have a fantastic week ahead, remainder of the week anyway, and I look forward to seeing you all again on the live show on Monday. And for the rest of you that are with us over at the Bird Nest, I'll see you in a few minutes after I've gone and made a fresh cup of tea. All right, take care, legends. I will see you all very soon.